Hello, good afternoon. Markets are closed now. It's a little bit later in the day. Again, hello, this is Ken Creager from Black Swan Financial Advisors. And we are on to video number 5 of the short videos. I guess they're 15 or 20 minutes or so, so they're not super short, but I'm trying to give you enough details to be helpful. And so again, these videos are for educational purposes only. And today we're gonna start wrapping this up. So we're just gonna talk a little bit about risk management with options and how you can hedge your portfolio. And in the earlier videos, we've touched on some of this before, and so there'll be a little bit of a repeat, but I think that's very valuable. So again, educational purposes only. Thank you for joining, and let's just jump right into it here. So what is risk management? What exactly are we talking about? So what we're talking about is identifying and assessing and prioritizing risks and taking action to minimize the impact of those risks. And actually, depending on how old you are, your risk tolerance, what your objectives are, everybody has a little different risk profile. So, this is a personal kind of thing that you need to look at and decide what you're going to do. And I guess one of the main things is that you should have a plan. You should decide beforehand what you're going to do, because what can happen is, in the heat of the moment, you might say, you get in a trade and it's going good or it's going bad or whatever, and you need to know what to do before you get into the trade. And a firm believer, one of the biggest things is to make sure not only do you need to know when to get into a trade, is you have to decide when you're going to get out of a trade, right? You need to decide ahead of time and set some benchmarks, or set a certain value, or you need to decide. Too many people let winners turn into losers, and I'm a strong believer in never letting a winner turn into a loser, and just letting their positions go down to zero and just writing them down to nothing. So one of the things that we're trying to use options for is to minimize the risk, or maybe offset losses in one part of your portfolio, and you're trading, or maybe you're holding positions or whatever. And if that part of your portfolio is going down, then hopefully your options trades are going up. So diversification, but just some things to talk about. Spreading your investments across different asset classes. And I'll get into this in a little bit more. Again, setting your goals and then monitoring. Okay, you need to monitor. You'll see a little my bonus trade or whatever. I went in on Thursday, I think, this last one, but I'm doing weekly options right now, and so they expire every Friday. And I monitor my positions, and I use stop losses, which is one of those strategies that I would recommend that you do to help manage your risk. Is you decide ahead of time how much of a loss you will take on a trade before you get out of it. Don't let it go to zero. Don't lose all your money in the trade. So in the advanced course about options and trading, we'll talk a little bit more about how options might be used with the rest of your investment strategies and portfolios, and we'll talk a little bit more in there about using stop losses. I like to use trailing stops. but you need to monitor, and then you need to understand the risk and the reward. Okay, you know, if you have 95% of your wealth in, you know, a portfolio that's well balanced, position sizing and everything, and you know you really have a speculation that you think, you know, might return, you know, 10x or something, you know. I mean, I allocate a few percent of my portfolio or my overall wealth to what I would consider speculative positions. I would consider Bitcoin, for example, speculative. And I've invested on and off over the last 5 or 6 years in Bitcoin and Ethereum and some others. And actually I probably doubled or tripled my money. I took my money out several times, but I'm totally out of the cryptos for right now. As soon as they were talking about Coinbase going bankrupt and me losing all my money in Coinbase, I kind of got out of. I was using Coinbase and I got out of it, but using hedging strategies, which we've talked about a little bit before now. So just a couple of main points, and this will be one of the shorter videos, but main points: volatility adjusted position sizing. So remember, options are leverage. You're actually one options contract 1 to 100. Okay, so this is probably the biggest part of managing your risk with options, is understanding, well, if I have, you know, one options contract or 5 or 10, what's my actual risk? You know, what capital is at risk? And understanding, you know, how much are you willing to risk? Because, so for example, if you have a $100,000 portfolio and you do 4% per position, that would be 25 positions, 4%, so it'd be 4,000 each position. And if you decided ahead of time that you weren't going to let anything lose more than 50%, then if one of your positions went against you and it lost 50% and you got out, you would lose 2% of your portfolio, right? So you know, what would happen if you had 50% of your portfolio in one position and you lost 50%? That could be bad, right? So adjusting the sizes, position, I gotta learn how to spell. But then you got to remember, we talked a little bit about this, about volatility. You know, for example, a position in Tesla is a lot more risky, a lot more volatile than a position in Walmart. And so you should size it accordingly. Okay, so maybe if you're going to put $5,000 in every single trade, maybe your Walmart trade, use that as your basis. Maybe your Walmart trade is $6,000 and your Tesla trade is only $3,000. Okay. Asset allocation, another big one, is spreading across different allocations of different sectors, different types of investments. Do you have real estate? Do you own a house? So you don't really want to, you can't manage your portfolio and your trading in a vacuum. You've got to look at your overall situation. And the market is actually divided up into, there's actually subsectors, but you know, there's technology, there's real estate, there's consumer discretionary, consumer staples, and you can look at the sectors, and it's really kind of interesting. Utilities, and every year different sectors outperform other sectors and other sectors underperform. Last year in 2022, energy was a big winner. Even though it went down at the end of the year, I think for the year it was still up like 30-something%. And technology lost like 30-something%. So you can diversify by investing in different sectors, and then also remember, cash. You know, especially in a volatile kind of, likely we're going into a recession and everything. It's very, likely that the market's going to be kind of tough this year, and the best time to buy into buy something is after it's gone down in value a lot, right? The best time to buy a house was in 2010 after everything crashed, right? So you need cash to be able to buy something. And then again, options are just part of your overall strategy. And we talked about using options for, like using covered calls. That reduces your risk. You sell covered calls on stocks that you already own, and you can make a % or 2 while you're holding your positions and, following your investment strategies. And by getting a little bit of money over time, you lower your cost basis, which lowers your risk, right? You can take a bigger loss, buying some of those protected puts to hedge a portfolio that's already gone up, and giving up a couple of % to buy yourself some insurance, or selling puts. Okay, I want to own a stock. It's like I showed you in that other video. If you want to own the stock anyway, and you could go buy it today for $100, why not buy it for $98? Okay, why don't you sell a put, get $2 per share, sell a put on it, and just keep doing that until you get put the stock, and then you own it. And so by buying something cheaper than the current market price, that is reducing your risk. So anyway, there's just some strategies. Again, I will be having an advanced course on options out shortly. Remember, this video is for educational purposes only. Black Swan Financial Advisors is my website. It's being reworked right now. It'll be up later. And then please subscribe to my YouTube channel. Again, just take the opportunity to learn and start out slow, small. That also manages your risk by starting slow and small until you've done it enough times that you don't make mistakes. Again, thanks. Appreciate you watching my videos. I'll see you later.